So Independent Reserve is an Australian Bitcoin and crypto exchange. We started in 2013. Our vision when we started this business, Jason, I guess, was to be the #1 place for Australian, New Zealand customers to buy, sell, and secure their cryptocurrency. Over the last 7 years, I think we've managed to do that quite well. We're one of the largest exchanges, we're one of the first regulated exchanges, we're one of the world's first insured exchanges. And we continue to, step by step, add more new crypto assets for our customers to trade and invest into, but also build features that, that help their trading and investment experience a little bit easier and more secure. Really. So, we're right now at the cusp of, I guess, what I think is a bull market. And I think the bull markets in Bitcoin are, I guess, linked to, and they follow the supply halvings that happened. And the last supply halving that happened was in May 2020. And we've seen a sustained price rise over that time. The last bull market, which I guess was heavily retail dominated, we've seen a lot of infrastructure developments in the space. Infrastructure for large-scale institutional investors to invest into this space, including trading and investment software, deep liquidity providers, access to be able to ensure their holdings, better reporting software. So all of that infrastructure is now in place. So when a large-scale investor wants to invest, they can do that in a way that's compliant with their, investment framework. So that's been really important. And in that time also, the regulation has developed a lot more as well. So I think previously the infrastructure and the regulation wasn't there to usher in those institutional investors. And now I think it's a much more different story. And I think the macro backdrop is a lot stronger for investment into Bitcoin and crypto for institutional investors. I guess this report, we did it because we've had a lot of investors, particularly family offices in Australia, that have been speaking to us over time. Lack of information, I guess, for them to get comfortable investing into Bitcoin and crypto. And so this is something we commissioned with one of the leading research houses in the world. So I'll just share the screen for you now. With Australia, I think there are about 300 single family offices and a handful of multi-family offices. So a single family office might be, the wealth of a single entrepreneur or a single family, whereas multi-family office is a number of families accumulating their wealth together, and they deploy the investment and risk management processes together. And I guess there are quite a handful of large multi-family offices in Australia as well. And because of, I guess, Independent Reserve's reputation and corporate governance, and the fact that we are one of the oldest exchanges in the country, mean that, we're in a unique place of trust and credibility that these family offices can talk to. So when they invest, I guess some family offices in Australia, they could be worth in the billions. Whilst that's the total value, net worth of what a family office can be worth, often the first investments a family office makes into Bitcoin and crypto, and we know this because we've looked after a few family offices, is usually a couple of percent. And it's only the start. We see this as a continuing trend. I think there are probably 3 really big reasons, and I think more and more families, more and more institutions will continue to go into Bitcoin. I would say hedge against inflation is the #1 reason. I guess that the current situation is, just about all the countries in the world right now increasing the supply of their fair currency and reducing interest rates. And what that does is, I guess, will create inflation at some point. And when that happens, we, the consumer, we lose purchasing power. Whereas Bitcoin, with its hard limit, fixed supply rate, is a hedge against that inflation. And it's done that pretty well. The other reason, I guess, is more from a portfolio return perspective. So if we consider, equity market valuations right now, very overstretched, I would say. Property markets around the world are over-leveraged. Fixed income, returns on fixed income are probably heading to negative yields. So what that means is, as an investor and as a portfolio manager, where are you going to look for returns? And Bitcoin's been, I guess, the fastest growing asset class, in the world for the last, many years. And I think if you have a look at this chart that I have here, it kind of illustrates that pretty well. So we've got the Bitcoin price charted against, overlaid against the S&P 500, the ASX, and gold. So you can see that Bitcoin has returned about 20,000% since in the last 7 years. Speaks for itself, really, from a return perspective. And I think probably the third reason that there's been pretty big influx of higher net worth investors, large scale professional investors coming into this space. There's been, I guess, somewhat of an institutional FOMO. So, you spoke briefly about Michael Saylor from MicroStrategy. He publicly invested, meaningful amounts into Bitcoin. The operational capital of his fund, he bought Bitcoin and he's put it on his balance sheet. I think there'll be a lot more companies that do this, that are sitting on a large cash pile that either are getting, they're just not getting the same return on their capital. So more and more companies have looked to allocate into Bitcoin going forward. The other is, we've had some other well-known investors like Stan Druckenmiller, Paul Tudor Jones. We've had some other big companies that are making plays in the space like PayPal, that are giving their customers and merchants exposure to Bitcoin. We've recently heard DBS, Southeast Asia's largest bank, is now launching a crypto exchange imminently. So, all of these news stories are adding to, I guess, this rush into Bitcoin, the $400 billion asset class, all the infrastructure's there for trading, risk management, insurance, all those things are there. So you can open significant positions up without moving the market too much.